Hey traders, this is Christian Farmer at Starbuck Trade Group, and this is your end of day market recap for Wednesday, March 23rd. Risk disclaimer is in front of you. Everything that we're going through is for information purposes. Please read the whole risk disclaimer there. So price action, not so good today. And I think we closed right around the lows of the day. Down, let's see, what are the raw numbers here? Let me just give them to you really quick. S&P was down 1.3%. The Q's down a little bit more than that, 1.4%. Oh, let me take that out. 1.4%. And then the small caps, they were down, they underperformed. They were down 1.8%. The VIX was up a little bit, up to 23. Bonds had a decent rally today. Hat tip to Helene Meisler was talking about the daily sentiment index, the DSI for TLT, I think was about a 10. So really oversold and big bounce. I mean, these moves in the bonds, 2% move. And there was a bond auction today too, but just big moves going on in the bonds. Like they're not moving like 30 or 40 basis points. It's over 200 basis point rally today back in the bonds, and a little bit kind of felt a little bit like risk off as well. Some other things like that rally too, gold, silver, both up on the day, and as I mentioned, the VIX was up. So the main question and that I would say for the day is like, was that the end of this rally over the last week? I think that we definitely hit some upside levels that we mentioned in yesterday's video that were taken out. So I'm not really surprised that we're seeing a little bit of a pushback, because we talked about a couple of these short-term levels. This 1 hour VPOC, right, was taken out. We went a little bit higher, but moved back. We're also way above value for the week. I said earlier, right when we started the beginning of the week, I said I wouldn't be surprised if we do get some volatility that brings us back into the top of value. And that's all in kind of how the market goes, right? It moves up and it moves down, right? It doesn't move generally, it doesn't move in a straight line to the upside or to the downside. There are periods where it does trend. We certainly saw that in the beginning of the year. We definitely trended more to the downside than we're used to, that we've seen over the last couple of years. And this has been a nice rally over the last week plus. So very decent rally. But at some point we're going to digest some of these gains, right? So I think overall, and I'm not saying this with any disrespect to anybody, but you just have to be realistic. I mean, the market's just not going to go up every single day, especially with a lot of things that we got going on right now. I mean, this isn't, again, just to say a couple obvious things, but there is a pretty major conflict going on with Russia and with Ukraine. And we're hearing from 20 Fed speakers a day too about hearing how many times they want to raise interest rates. So this is a different market than it was back in 2020. I'm just going to so by the way, so here's the 1 hour VPOC that was taken out too, and NASDAQ futures, right? So again, this is something that I said, hey, I wouldn't be surprised if we see some digestion here. So yeah, closing on the lows is kind of disappointing for the day. And like I said, I won't be surprised if we kind of digest a little bit further. That's perfectly normal, right? To see that, and especially with everything going on as it is. All right. Just a couple other things too. Tesla, I kept talking about different short-term levels that were taken out. We talked about like a couple of these version point of controls taken out. Here was the one that was taken out, 1029. It's really tough to figure out like which one of these is going to be the one that kind of stops the Tesla rally. For now, the rally is still intact, right? Even though it did get all the way up to 1038, but you could see this 1 hour trend, right? The trend is still intact. So unless it really kind of loses this, right, and breaks maybe below 980, then I would say, okay, maybe there's some real profit taking going on. And even if that happens, right, if you wanted to get into Tesla, if it checks back to the top of value 943, that might be a plan for you to kind of get involved in this area of the market. Also note this other level that got taken out, right? We talked about this. I try not to spend too much, all of the video talking about what a version point of control is and how they work and why they're important, right? It's a very high volume area that has not been revisited. I talked about that decently in yesterday's video. So if you have questions about virgin point of controls and why they're so important, why they can often lead to reversals, please go ahead and go through yesterday's video. I spent a little bit more time. I just can't go over them in every single video, right? It's not fair for people who watch them every single day to go over the same principles, but that was a pretty good one, right? 1038, tag that and move back. Again, just another example of how virgin point of controls work. All right, so that's Tesla. And then Apple was a stock that was talked about. I actually traded some Apple today. I actually got lucky and took it off right around the highs of the day. Took my last target. But again, be realistic. How many days of rally have you had in Apple? 1, 2, 3, 4, 5, 6, 7. So should you be initiating a new swing trade here in Apple after 7 straight days? I'm not going to answer that question for you. You have to think about it, right? Is that a good risk? Everything in trading is about risk. I don't want to say everything, but a lot of trading is about risk to reward. It's about probabilities. So after 7 or 8 days of a rally in Apple, is this a good place for you to enter, or is this a good place for you to take profits? I'll leave that to you. And again, for a swing trade, you could day trade as however you want to, because I day traded it today and it worked pretty well. But for a swing trade, and for an investment, that's what you kind of have to think about, right? Do you want to see a little bit of digestion here and a little bit of backing and filling, right, to kind of put on a bigger trade, right? All things that you have to think about in trading. So before I get into just a couple other concepts, I would say this too, right? I keep seeing this either on on Twitter, or I see investors asking like, oh, does this mean like after this rally, like is it like what we saw back in are we going to did the market finally put in a bottom, and are we rocket ships, rocket emojis, are we going to go back to that? I remember what happened in 2020, right? The Fed was inserting all types of liquidity into this market, right? They were doing anything and everything possible, right, to increase liquidity. They were increasing the balance sheet. They were lowering interest rates in 2020. What are they doing now, right? So again, I'm not giving you the answer to these questions because I don't have the answer to all these things. I don't have a crystal ball, but I think, well, I will tell you where I'm going with this, but I think that this is just a different type of market. You have to trade it a little bit differently, right? You have to be a disciplined trader. You can't go, like, in my opinion, you can't just go back to like, oh, every stock is going to rally every single day, and I know that we saw this GameStop and AMC rally pretty decently. Does that mark the end of this little run now that those names, and you could call them whatever you want to, but is that healthy for this market? Do you think that these names are going to go back to highs? I, for one, don't. I think that they could rally a little bit, and maybe they had a little bit of a short squeeze go on, especially with the CEO buying a little bit more shares. I think he just bought 100,000 shares. But you have to kind of answer that question for yourself. Do you really think that we're going to go back to that market in 2020? Are the conditions exactly the same, right? Or over the last year, did you learn some skills to kind of help you trade in a more normalized market, which I think this year is? So that kind of leads us to, and this is another thing that I see on Twitter, right, where you have to trade growth stocks, right? No one has a gun to your head and says that you have to trade growth stocks, right? There's plenty of other opportunities out there. And come midday today, because I did think today, going back to today's price action a little bit, I thought today was a little bit tricky, right? Because we did rally, and by the way, we rallied right into resistance for the day, which is the bottom of value for S&P, and it was the top of value on NASDAQ. So we did hit some resistance, and then there was basically a fade for the rest of the day. Right, here's NASDAQ. I even put this chart out here where we were trying to get into value for the day. We managed to do that. So that's why today I thought was a little bit tricky. We had a really nice 5 minute bar here, but we failed at the top of, same one failed at the bottom of value, one failed at the top of value. NASDAQ failed at the top of value and had a pretty big reversal back to the downside. So again, it's a tricky day. There's no doubt about it. All right. What did we start to see at the end of the day? We started to see, instead of bullish plays, and this is why it helps to kind of be able to read the tape a little bit and to read option flow and some of the names and be open to all possibilities. But we started to see names like, NTR, right, catch, some bullish trade flow, and a tech resources, which I'm long, right, and gold seeing a little bit of calls again, and that's like the third time I've seen gold calls, GLD calls, like in the last week or so. So it looks like there's some deep dip buying. The gold futures look a little bit better on the chart than GLD does, but I like the chart of this. And if you look at things like Newmont, right? So there are plays, to kind of put yourself into while you're waiting. Like if your bread and butter is trading a Tesla, trading an Apple, trading an Amazon, right? While those names rest and kind of consolidate a little bit, it seems like the flow goes back into the commodity plays, right? And if you've been playing some of these areas of the market, they're good. I mean, you could definitely make money in these. There's nobody with a gun in your head that says, oh, geez, you can't, these are boring. You can't play these names. These names are not boring, right? It may just seem boring to you, but look at Alcoa, for example, right? This has been a market leader now for months, right? I mean, this just made a move, right, from $70 to 94. So there are stocks that continue to act very bullishly. You just have to be open to looking at them, right? And if you have to cover up the symbol to trade in Alcoa, so be it, right? But these are the names that continue to act very well, as well as a lot of energy plays. So, I think there's some separation with how traders are trading this market. Some have been able to adapt, and I think that's the key to being able to trade a market very well, is being able to adapt to what the market is giving you rather than staying stubborn, right? Unless someone, I said gun to head about what you have to trade, right? Also, unless somebody is saying, hey, you're running a strict growth only fund, right? Unless you're managing people's money that it has to be growth, right? Then you might be in that camp. But if you're a retail investor and can do anything that you want, then there's nothing stopping you from making money on plays like this, right? Because this, and there's a handful, I keep talking about these names every day, but a CF Industries as well, right? These are the market leaders, right? They continue to consolidate, right? I was showing this, somebody asked me this about a couple of weeks ago. They're like, well, I don't understand, like, well, how do you get into a CF Industries here? Well, take a look at the lines that I've got drawn. Every time it consolidates in an uptrend and starts to break higher, there's your trade entry, right? And this thing is giving you multiple entries once it comes in and touches to the 20-day moving average over the last few months, right? This last one was a little bit tricky because as strong names do, they don't go down for long. You had one big reversal bar, held the 20-day moving average, and then kind of just leapt over that last one, right? So I'll show you the trade blotter for what I'm doing, right? And you could see, I've been in this VET, right, which is a new one for me. Again, up 3%, while the S&P is down 1.3% for the day. I'll take it. So I took two targets, and I did that. I took two targets. I actually took one pre-market, right, which was the first. I wanted to get that first target in because I've never traded this name before. I got a target in NOC, which was a trade that I entered into yesterday. It didn't do exactly what I wanted it to, but I'm glad I got that first target in. Now I can kind of sit with it and be a little bit more patient with the remainder of the trade. NTR, I actually took this trade off because I saw it reversed on the day. And then I was kind of interested in possibly getting back into it. Here's the Apple. I day traded that. I day traded some SETG. Very important here too. I put on a trade yesterday in the regional banks just because I thought it would move with interest rates. I honored my stop price and got out of it pretty quickly. This is going to happen in this type of market. You're not going to be right all the time, right? You have to be comfortable. I was watching Mark Minervini had an interview with Nick Leeson, right? Which was the trader that blew up Barings Bank back in I think it was the 80s, right? And he's still trading, right? Even though he was thrown in jail for a little while. It's a great movie to watch called Rogue Trader. He never admitted he was wrong, right? He kept on doubling down, right, and doing things to kind of hide losses, right? And he admitted on his call, you have to, if you're going to be a successful trader, you have to admit when the trade is going against you and you weren't right in that trade. Now, and it's fine to have small losses. So I had a small loss in this. All right, so I took this off. Again, it's important to go over the losses. You're just not going to have 80% winners in this market, right? You're going to, the best of the best have a win ratio of 55% and losing 45% of the time. So how does that work out to be a really good trader? That you got to keep the losses small, right? And you have to honor your stop prices. You should have those stop prices set. There was something else I got out of too that I got stopped out in the beginning of the day. Cisco, Dudville. I thought Cisco is kind of right in the wheelhouse of what the market likes. And look at this thing fall apart too. This thing was down 3% for the day. I was looking for a breakout of value. I didn't get it, right? And maybe I was a little bit too early getting in that trade, trying to anticipate something. But it was fine. Here's my exit. 55.40, paid 56. So I lost $1 on it, but it is what it is. You move on. I tried trading some crowd today. I didn't like how the market was kind of turning. So I got out of that one. I added to my tech resources. Right. So again, and again, I could be wrong. Something could happen overnight where this changes, but I like, adding to something that I think is going to go back to new highs. Right. There was a nice price target rating by, I think it was Goldman earlier in the week. That thinks that tech resources go much higher. I think it does too. So I'm staying with the ones that work. And then you could see what I did here at the end of the day, right? All right. If you look at a couple of these utility plays like AEP, which is a utility, nice bull flag and is resolving higher. I didn't get the close I was looking for in this Con Ed, and the level that I would watch. I basically went into the trade as soon as it hit that top of value, which is 90.20. So if you're not in it, or if you started a position, I would wait for the breakout or break above 90.21. Right. And then another name too that I added late in the day. Oh, was GLD, which we already talked about that. So I did add a gold position as well. All right. So again, these things aren't going to move at quite as fast. Like, a Con Ed and GLD is not going to move as fast as a tech stock. But that's kind of what I'm doing with my cash balance right now, is going into these things that might be a little bit safer in this environment. I wanted to talk about, I've been saying very positive things about this market the last couple of days, and what we've been seeing in the market breadth and the McClellan summation index, which gave us a bull crossover. However, it's not all rosy, right? The regional banks were down 3.6% today. Again, this was a trade I got stopped out in. What I was looking for was a break above the downtrend line, and I probably put my position on somewhere in here yesterday, thinking that it was going to turn higher. Right, it didn't do that. Right, and it's looking pretty weak. So we'll see how this goes with the banks, but it to me, there's something not right here going on with the banks. I put out a tweet yesterday talking about how much better the Canadian banks are acting versus the US banks. Even though this was down, Bank of Montreal was down 3.7% today. So they're not shielded either, but JP Morgan was down 2% today. Wells Fargo, which had a really good day yesterday, was down 4% today. So very tricky, this group. So, there's some areas that you just kind of have to avoid. if you're shorting. I don't talk too much about, speaking of shorting, I don't talk too much about that, but I think if you're looking to kind of put on a hedge or even just an outright short, I think you could short this ARK fund versus 67.85, right? Now that it has had three or four, one, two, three, four, five green candles out of 7 of the last, and it's into some resistance, right? So I like shorting downtrends, right? Bounces and downtrends, right? And you could set your stop to maybe at $68, right? And that's the way I would do this. Or you can go long. Right now I'm long the SARK, right? Another one too, if you're looking for a short, Beyond Burger, right, has moved up from $35 to 50, and right into it. Doesn't look like a similar chart, right? So similar setup, bounce in a downtrend, right into resistance. So I did not put this trade on, but I'll be looking at it for tomorrow if I think the market is weak. All right, guys, have a great night. See you tomorrow.